Hi everyone, my name's Darryl Panes, CEO at As Good As Gold Australia. Once again, I'm joined by my brother Brian.
Thank you, Darryl.
Partner at As Good As Gold. And this morning we interviewed John Adams, Chief Economist at As Good As Gold Australia. John, how are you this morning?
I'm doing well, mate. How are you going?
Very well, thank you.
Morning, John.
We have an event coming up, John, as you would be very much aware. We have an event coming up in Adelaide. It's the 24th of Tuesday, the 24th of November. Now, this is the first event that we've been able to hold due to COVID-19 for 15 months, 16 months. Now, this will be held at the Hyde Park Tavern at Unley in Adelaide, South Australia. It's a venue that we've used quite often in the past and really supports our needs beautifully. And John, of course, you've spoken there on a couple of occasions and we've always had sold out audiences. This time you will be joined, John will be our main keynote speaker. We also have another phenomenal speaker, and that will be David Morgan from the Morgan Report. David is he's known as the Silver Guru. He would be the number one man in the world when it comes to his knowledge on silver, the role it plays in the economy. He will be giving us his impressions of where silver's going in the immediate future and over the next few years. This is going to be really powerful stuff. He's written 3 books on silver. One was Get the Skinny on Silver, The Silver Manifesto, second book, and Second Chance, third book. They've all been bestsellers. So David will be live streamed from the United States of America to the Hyde Park Tavern on that night. So this is massive. Now, it's all good news. Everything that I've said so far is good news. The not so good news is that we've got a limit of 69 people due to COVID-19 social distancing. So there'll be a COVID-19 marshal there, I'm sure of that, making sure that we adhere to those policies. So guess what happened? We advertised, promoted the event 2 nights ago, 48 hours, and it sold out in 48 hours. I quickly got to the hotel again and arrange for them to swing a few things around. I said, look, we're really desperate. We really need to run another event. So we're doing another event on the Wednesday night following, on the 25th. And so the next 69 people, you're going to have to be quick. The first session sold out in 2 days. I believe the next session will sell out very similarly. So my strong suggestion is to make the decision to register for the event. All you need to do is click on the link in the description below. So if you could do that, just click on there and lock in your attendance. It's a $10 event. And you can come enjoy dinner in advance around 5:30. They start to serve dinner. But the event starts at 7 o'clock through till 10 o'clock that evening. 2 fantastic speakers where we're really wrapped in the fact that we can at last start to do some events as we have been recognised and doing in the past. John will be there, and you've got an opportunity to catch up with John at the end of the presentation. They've got a bar upstairs open until midnight. So we're looking forward to that. Love to think that you guys will get involved and attend, and really looking forward to seeing you there. John, big day. We're experiencing the eve of the United States election, Joe Biden versus Donald Trump, of course, and this is one of the most anticipated elections in history. The last 100 years, I would think, John, that this is the biggest event in that period of time, 100 years. A lot to come out of this, of course, a big result at the end, depending upon, of course, whoever wins, and we're just obviously not sure of that at the moment. But I believe that the interest level in this event, this election, has dwarfed those over that last 100-year period. Risk of violence, of course, in the United States tonight, as we enter the evening in the United States of America. Risk of violence huge. Washington, D.C., businesses have been boarded up in anticipation of riots. So it's, I guess, what we really need to look at here, and a lot of people would be, in Australia, would be saying, okay, that's in the United States of America. Who cares?
Yeah.
Gets back to the old adage, John, I believe, that, hey, America sneezes, we catch a cold. You know, our reliance is so much on the US, as it is China, for example, trading massive business that is in jeopardy at the moment, just depending upon which way this goes. And I don't know about you, John, but I'm just I feel that we are looking at you know, a contest really here, free enterprise versus socialism. That's how serious this one is. It's going to impact on the whole world. This is massive. I'd certainly like your take on it. You'd have some numbers coming through at the moment, John, that you'd be conversant with. Love you to share that with our viewers. How's it going at the moment? Biden versus Trump. What's it looking like? And then, if you could, share with us what you're anticipating moving forward, let's say over the next 24 hours.
So I'm just looking at the time now. It's 11:24 a.m. Eastern Standard Time here in Sydney. And so most of the polls on the East Coast of the United States has closed. Counting has already begun in several states. A couple of states have already been declared. Kentucky has gone to Donald Trump, which was expected. Vermont has gone to Biden, which was expected. We have seen some of the early, the early voting for Florida being counted. So far Biden is leading, but I think it was expected that a lot of the preliminary postal votes would be more Democratic, and that the voting on the day would be more Republican. So we'll have to wait to see what Florida produces. But there are a few key swing states that are going to determine the election. And even though that there is hope in America that a candidate will be declared tonight, I do know that in some states like Pennsylvania and Michigan, it will take several days to count millions of postal votes, and there are a whole host of legal challenges which may result from some of that counting. So it may be that we'll have to wait till the weekend to have a clear view in terms of who's going to win. But it is interesting that when you look at the polls are saying that it's a clear victory for Biden, and yet the most accurate polling group in the United States, called the Trafalgar Group, they are calling the election for Trump. And they called it in 2016, and they had the most accurate polling record in 2018 with the midterms. They have a very different methodology of how they actually try to understand how voters are going to vote. And the head of that polling company gave a couple of interviews the other day and basically said that the entire industry has got the polling wrong. They have the right polls, and they say Trump will win quite convincingly. And so we'll have to see how it all plays out. But I do agree that there are huge ramifications, not only for the United States, but also for the world. Some things won't change no matter who wins, but some things will change, and they'll impact us. Financial markets will react in very different ways depending on who wins. Also, I think the attitude in relationship with China will be quite different depending on who wins, and that relationship will obviously impact on us, as you said, because we're heavily reliant on China. So a lot is on the line here, and we'll have to see how the counting plays out over the next few hours, if not a couple of days.
Do you think I'm overexpressing my views when I talk about free enterprise versus socialism? That's the way I'm seeing it at the moment. Do you think am I seeing this thing correctly or not?
I would say that in some aspects I would agree, because there are some big policy differences particularly when it comes to energy and when it comes to how to finance certain, for example, the renewable energy sector will require huge government subsidies, and Democrats are more likely to provide a lot of federal spending for that versus fossil fuels, etc. So there are some differences there, but I would say that, a number of people in the gold and silver community has said that the last time America was capitalist was 1912. So the fact that the Federal Reserve was established and Nixon going off the gold standard in 1971, we've seen huge unprecedented amounts of money printing, record low interest rates, deficits under Trump as far as the eye can see. And I should say, I was quite optimistic as to what Trump may do when he was elected in 2016, but I think his economic record has been a complete disaster for America. Not to say that Clinton would have been any better, but the deficits that they're running and the amount of debt that the federal government is incurring, and the whole state of the financial markets is it's quite extreme. So one could say that the things that Trump has been doing is quite socialist over the last few years, and the situation is not going to improve going forward, no matter who wins.
Well, John, obviously this election is important for America, but I honestly believe it's also very important to the global community. What happens in America generally happens in Europe, and it certainly happens here in Australia. Decisions that they make over there does affect our position with China and things like that. But what do you think are the global economic implications if Trump were to win the election as opposed to Biden?
So I think one of the most important things for our viewers to understand is we have a global debt bubble. It is the biggest the world has ever known. And it doesn't matter who wins the election, that bubble's not going to go away. So we have some huge structural economic problems which are going to cause havoc as we go forward. Central banks are printing like crazy. COVID is, we're having a second wave coming through parts of America and parts of Europe. So I think from a strategic point of view, the election is immaterial. I think when it comes to monetary policy, the Federal Reserve and the ECB and the other central banks are going to do whatever they want to do. So I don't see the election having much of an impact. Fiscal policy, when it comes to federal spending, I do think that if Biden was to win, he would be spending more money. There would be a larger deficit that would have negative ramifications for the bond market, for the US dollar, for the stock market as well. I would be expecting gold and silver prices to be higher in the immediate term if Biden was to win. I think the financial markets would unravel somewhat, particularly because Biden has said that they do want to raise taxes, particularly on corporate tax and income tax as well. So I think there are some differences that will lead to a weaker economy under Biden, lower economic growth, larger deficits, a weaker dollar, higher gold and silver prices. But even if Trump were to win, I don't think that it gives us much hope, given that we've got this record debt bubble, we've got unprecedented fiscal and monetary stimulus, and that's going to continue no matter what, because it's something that we've discussed in some of our previous interviews. The entire global elite establishment, they are petrified of this bubble collapsing because what it will mean to their both political and financial power. So there is an incentive worldwide to keep the show on the road, to continue to print, to continue to spend, and do everything, whatever they need to do to keep the current financial and political power structure in place. And so because of that there is that incentive, from a macroeconomic point of view, I think Australia's stuffed, I think the world is stuffed, and that things are going to get worse as we go forward because of the underlying problems that we have.
So basically, as I'm reading it and what you've just said, I mean, President Trump could be the best president in the United States for the last 100 years, but if we continue to print money globally, that's the real challenge that we face, is the printing of money, the excesses of deficits and things like that. It doesn't matter what president is in the White House.
Totally. I mean, in the last couple of years, as I've gone to Canberra and spoken to members of federal parliament, I think it was in the last year, one of the conversations I had with two government MPs, I said to them, it doesn't matter how much you wish it, you can't click your fingers and one day the all this debt's going to go away. So the debt is here. It's a big problem. We will face a day of reckoning in one form or another. So if the debt bubble was to collapse, we would have huge deflation. We would see the biggest depression in the history of humanity, because it's the biggest debt bubble in the history of the world. But if they continue to print enormous sums of money, we will have a huge inflationary problem going forward. So, there will be a worsening economic context no matter which way we go. Obviously people, hope for the best. But when you've got the biggest debt bubble in the history of the world, it doesn't matter how much wishful thinking you wish to deploy, the debt's not going to go away.
Well, very, very true words. Darryl's got the next question, but I'm sure we'll be bringing up these deficit questions in the next few minutes.
What I can't quite understand here, John, there's a lot of things that I can't understand. Maybe you can. But, you've got mainstream economists, you've got journalists in Australia who keep on hyping up, the future, the immediate future. Now that the lockdowns have been somewhat released, we can really look forward to prospering once again. And, I'm looking at it, I'm saying to myself, it's not like a running tap with water where you can just turn the tap on and off and, you've got water again and you switch it off and it stops. Switch it on, it starts again. The economy isn't like that. Businesses don't operate that way. You shut them down or you slow them down so they become very unprofitable over a lengthy period of time. Many of them never return, and some of them do, but very slowly and very cautiously, of course. And there are all sorts of ramifications from that, of course. They haven't been profitable, so they don't pay tax or anything like what they used to in the past. I just can't quite come to grips, John, with the ignorance of mainstream media in this regard. I've got to say, in the last 24 hours, I'd like your feedback on that in a second, John, but also in the past 24 hours, the Reserve Bank of Australia, the board, has held its November monetary policy meeting, has made several significant announcements. Can you outline what the RB has announced and what does it say about the state of the Australian economy?
Thank you for the question, Darryl. I mean, you asked me two questions there, so let me just answer the first one in terms of the mainstream media. So I would say that there is a couple of points to make here. The first one is that the level of sophisticated economic analysis in the mainstream media is quite low, and there is probably a couple of reasons. I think the journalists, for some reason they're not willing to be critical of government policy, and there's perhaps something to do with political and financial interests and links to the banks and in terms of all that sort of stuff. I mean, the other thing is I think advertising for media companies is having a huge impact. I mean, you think of, who buys the advertising? Retail, property sector, banks. They're all tied to this household debt bubble. So if these media companies are going to continue to generate advertising revenue that makes them profitable, they have to promote the interests which have been financing them over the last few years, and all of those interests are pro-stimulus industries. So I think there's commercial reasons why the mainstream media is pushing propaganda, but there's also, I think, a lack of good analysts writing, and then those who are cluey enough to know what's going on. Some of them have, close relationships with the elites, people who are close to politicians or people close to economic institutions like the Reserve Bank or close to the commercial banks, who don't want to be critical because they don't want to disrupt or affect some of these long-standing close personal relationships that they have. So I think for that reason, we're not actually getting any critical analysis. The other point I would make is, and a lot of people would not be aware of this because the history has been lost to some extent. If you go back to Germany before hyperinflation, so I'm talking 1921, 1922, 1923, there was universal consensus for stimulus in Germany, whether it's government, whether it's unions, whether it's the business community. And obviously, when everyone kept on egging on the central bank to continue to print, obviously, when the international financial market started to lose confidence in the German mark, that then resulted in hyperinflation in 1923. So the fact that we do have what it would appear a mainstream consensus about the current policy approach, that is very troublesome given what we know from history and what that may lead to. So that's what I'll probably say about the media question. Now, in terms of the RBA, so earlier this year, I did a series of videos, and we talked about it on this channel, and I've done some videos with Martin North, where I said that the evidence is coming through that we're experiencing stagflation. Now, some people have said that stagflation is coming. I think we have been experiencing stagflation over the last, say, 6 months. So because we can see that unemployment's going up, incomes have been compressed right across the country. People's employment has been affected. In some states, up to 60 to 70% of jobs have been affected because of the COVID-19 and then in terms of the lockdown. But then also when you look at the money supply, the annualized growth in terms of broad money, it's been shooting up. It's been shooting up like a rocket. And as of September, annualized growth of broad money is at 12%. And this is the fastest growth since, I think, from memory, October of 2008. So all this money printing is actually making its way through the financial markets, in the bond market, throughout the economy. So the textbook says when you go into recession, prices should fall because of a lack of aggregate demand. Well, what we can say of 2020 is that there has been, in some instances, a bit of a slight decrease in prices, but in some of the key areas where people rely on essential goods and services like food, like housing, and in some cases in rent, for example, high-rise apartments in capital cities, those sort of rents have fallen, but in other markets, like, for example, in Wollongong, rents have been fairly stable. So we are seeing rising prices, and I think once we fully come out of the lockdown, we're going to see more cost of living pressure coming through the system, and that, I think, with all this money printing, is evidence that we're experiencing stagflation. So I did say that stagflation, it was my expectation that stagflation would intensify starting October because of the release of the reduction in the JobKeeper and job seeker payments that was going to start at the end of September. So those reductions have occurred. We are seeing that unemployment is creeping higher, underemployment is creeping higher. I'm hearing on the grapevine that there are more insolvencies that are happening between now and Christmas. White collar workers in places like Sydney and other capital cities, they've been given redundancy notices, which are coming through in November and December. So we will see unemployment go up. And this is at the same time that we have all this record stimulus. So the economy is far weaker than what I think the government has anticipated. And that's why we saw, even though we've seen unprecedented action by the RBA throughout the year, they came out yesterday with an even more extreme package, the most extreme and the most dramatic monetary policy package in the history of the country. And just to give you a bit of a sense, so official interest rates fell from 0.25% to now 0.1%. they've been targeting. So rather than doing quantitative easing, their policy, the way they described it, is yield curve control, which is to control the interest rates on certain bonds at certain maturities. And so earlier this year, they announced they were going to try to keep the interest, the bond yield for the 3-year bond at 0.25. Well, now they've announced that they're going to reduce that to 0.1%. They announced a 200 billion term funding facility for the banks. And they're now offering financing for the banks directly at 0.1%. So prior to COVID, the banks would be going to the international wholesale market for credit. And then the RBA says, well, no, we're going to provide you cheaper credit than the international market, and we're going to provide it at 0.25. Now they're saying we're going to provide the banks credit at 0.1, which is obviously going to relieve commercial pressure on the banks, because obviously the banks are, a number of the big 4 banks have seen profits drop by more than 50% because they're dealing with mortgage deferrals and a weaker economy and a whole bunch of other factors like that. So now the other thing is that the banks have what they call exchange settlement accounts at the Reserve Bank. So particularly when the RBA buys these bonds, the way they buy these bonds is they deposit the funds from the proceeds of buying the bonds into these exchange settlement accounts, and they typically have been paying the bank some interest. Now, they announced yesterday that they're no longer going to pay any interest, so there's no incentive for the banks to keep any money in these accounts. So prior to COVID, there was only a couple of billion in these accounts. Once they started buying bonds in the secondary market, these exchange settlement accounts, the balances went up to about 90 billion. By about September, it fell to about 50 billion. And now that they're paying no interest, they're basically saying to the banks, well, this 50 billion you've parked in our accounts at the RBA, we want you to withdraw that money and deploy it back into the economy. And so paying no interest on this money is an incentive for them to take this money and do something more productive with it, or something that's going to generate them a greater commercial return. And then the last announcement they announced is, so just like I said before, at the beginning of the year, the RBA was focused on about buying 3-year bonds. Now they're committed to buying 5 and 10-year bonds, and they're going to be buying 100 billion a year. So this is about 5 billion a week. That they're sort of that they're announcing in total. So when you look at the 3-year, the 5-year, 10-year is about 5 billion a week. But for the 5 and 10-year, they're buying about 100 billion a year. And the focus on this is to keep the long-term interest rates down in the bond market, so that the financing for governments as well as for the commercial banks is going to be lower. So so what does this mean? It means that it's going to be cheaper to get a mortgage. There's a bigger incentive to get into more debt. It's going to help people who are already in debt to refinance and to manage their finances in such a way that they won't default. But it's also going to drive the financing costs for government to be lower. And obviously, with a lot of this yield curve control, or QE, that they're doing, the incentive or the message to government, federal and the state and territory governments, is to get in to have larger deficits so they can finance infrastructure to keep people in work. So the broad strategy here is to stop this debt bubble from imploding. And the way they want to do that is to keep people in jobs, because once unemployment gets too high and people can't service these mortgages or these personal debts like credit cards or car loans or personal loans, that's when the whole debt bubble collapses, and that's when the commercial banks are in serious financial trouble. And so the whole goal of this is to, on a cash flow basis, keep households afloat so that the system doesn't implode. And so this is the most extreme package in Australian history. Now, just going back to your first question for a second, in terms of the mainstream media, the most important question that one should ask the RBA, that no one will ask because there is no answer, there's no credible answer, is once you lower interest rates to this level, once you buy these bonds at to the scale that the RBA is buying now, how do we ever go back? Because if you stop buying bonds, the interest rates are going to go up in the bond market. If you try to sell these, there's not enough private sector demand to handle these bonds, and the bond yields are going to go up. If you start to raise interest rates, then people who have record amounts of debt, they won't be able to service this debt, because you still have about 70% of the market on variable interest in terms of mortgages. So, we've got an upcoming seminar that we're going to be doing in Adelaide, and I'm sure, Darryl, you're going to talk about this at the end of the interview. But one of the key messages about why is Australia stuffed is where we've locked ourselves into a box and we can't get out. Because if we try to get out, the debt bubble collapses, property is going to fall through the floor more than 50%, and we're going to have a huge depression. And they've done everything to stop that. And they've taken us down a dead-end one-way road, and no one's asking them, well, what do we do when we get to the end of the road? Well,
yeah.
So that's why I think what the RBA announced yesterday is completely disastrous.
Yeah. Yeah, look, it's really interesting, isn't it? I mean, when cash rate was 1%, you thought, how could that ever be? And now it's 0.1 of 1%.
You might as well say zero.
Well, that's right. Then who would have ever believed? John, you've actually answered a question there in advance of me asking the question, so well done. That's pretty hard to achieve. But one thing I did want to highlight, and that is this. I was watching an announcer the other day on mainstream media. Was yesterday. No, it was today. And the announcer said, he was talking about interest rates, the RBA, and he said, do you know, they've just announced that this 0.1 of 1% will probably remain intact for the next 3 years plus. And his comment there was, isn't that great news? Now, you've just explained why it's not great news, but this is the message that's getting across from mainstream media. Isn't that great news? What people need to understand is that you don't lower interest rates to 0.1 of 1% and a lending rate on a home mortgage of 2% or less than 2% when the economy is thriving. There is no need to do that. And what it's a self-admittance that the economy is in dire straits. And people need to recognise that. It is in dire straits. You know, I know there are young people out there who are saying, this is my one and only opportunity to purchase a property and pick up $30,000, $40,000 as an incentive to do so from the Australian government. And wow, this opportunity may never ever come along again. No, it probably won't. It probably will never come along again. But the economy is in dire straits. That's why they're doing it. And when this bubble bursts, and John's correct, absolutely, you know, it's to prevent the bubble from bursting. But I remember a gentleman by the name of Vern Gowdy, and I've quoted this before, but he said there has only ever been one way to go broke, and that's to carry too much debt. And that's exactly where Australia and the whole of the world is at the moment. Our debt levels are at a level where they have never been before. And so real concerns moving forward as I read it.
Yeah, well, John, just this conversation in general is, I'm writing down a few figures, and I think I want the clients of As Good as Gold and anybody else that watches this is to remember that $1 trillion has now been talked about for a bit. And $1 trillion, by the way, is one with 12 zeros. And the billion was a large amount of money with 9 zeros. Now it's gone out to 12. Anybody who tells me we don't have inflation, I think they better read some history books, because 12 zeros on the end of a one is a lot of currency. And I say currency because that's what we've got, currency. Also, too, inflation. They say we have no inflation. Just look at the stock market. Just look at the real estate market. You have inflation. Just look at the history books. My question, John, right now is, since our last interview, our great treasurer, Josh Frydenberg, has handed down the federal budget for the financial year 2020-21, announcing a perpetual budget deficits for the coming decade totaling more than $1 trillion. Okay, various state governments, since these budgets have come through, various state governments have also handed down budgets for the financial year with large deficits. John, how sustainable are these budget deficits, and what are the implications of this build-up in the public sector debt?
The first part of the question is how sustainable is completely unsustainable. Not a lot of people have thought through the implications of what this federal budget has done. They provided forecasts going out to financial year 2030-31. Federal government gross debt is projected to go to $1.8 trillion. Net government debt is projected to be $1.3 trillion. 10 years of deficits. The response to COVID-19, if these deficits are to manifest the way they've been projected, it's going to cost Australia or the federal government $1.1 trillion. And this is all on the premise that nothing else goes wrong over the next decade. But also it's also premised on the fact that they have what I would call reasonably optimistic forecast about what the next couple of years is going to look like. And just to give you an example, the budget assumes for next year the Australian economy is going to grow by 4.75%, whereas quite a few private sector economists in the last few weeks say that no, they think that the economy is only going to grow by 2.5%. So if these rosy forecasts don't manifest themselves in the next 1-2 years, the deficits in the next couple of years are going to be larger than what is stated. And just to give our audience some perspective, the projected deficit for financial year 2021 federally is supposed to be about $213 billion. And for financial year 21-22, it's supposed to be about $112 billion. So we are talking records amounts of money. And, when you think about John Howard, he came as Prime Minister in 1996. Government debt was $96 billion. Took him a decade, took him privatization, selling a lot of assets to pay all that off. And by the time he left office, we were on a net basis debt-free. We had $70 billion in the bank, and now we're looking at a scale of debt that we've never, at least in nominal terms, we've never contemplated before. And I did a recent video with Martin, and I've written a detailed article about this, where some economists have argued that we can outgrow this debt, just like we outgrew the debt that we incurred during the Second World War. But once you actually look at the record of Australia from, say, 1945 to 1970, there is no prospect of us in terms of outgrowing the debt. So we are basically stuck. And again, we're going to have the same sort of problem like we do in household debt is, our international creditors, because we've got this record amount of foreign debt, at some point they're going to say, well, we don't have confidence you're going to pay us back this money, and we're going to struggle to continue to finance these deficits. And when that happens, we're going to have a sovereign debt crisis, kind of like what Greece went through in 2012. Australia had a sovereign debt crisis during the Great Depression. And that's obviously going to lead to a balance of payments crisis where we're going to struggle to maintain our levels of foreign debt overseas. And that's when the real funding games start. So, one thing I will say, and maybe some of our audience will be slightly critical of this, talking to politicians, particularly at the federal level, the view is in professional politics that the Australian people don't necessarily care about government debt. They take seriously their own personal financial circumstances, but if the government is racking up huge amounts of debt and running huge deficits, people don't tend to think about that impacting them or that it's their responsibility. If the federal government runs a deficit, or say the Queensland government, and obviously the Labor Party was returned in Queensland, even though the debt in Queensland is projected to be more than $100 billion just for the state. That has to be paid back. that's the responsibility not only of the professional politicians who incurred the debt, it's the responsibility of the citizens in which the debt, that debt is basically in our name. When that debt has to be repaid, that is obviously going to cause immense hardship because of how governments are spending money. A lot of spending at the moment is in social welfare, health, and education. And I dare say that if we have to tighten the belt to balance the budget and start to pay back this debt, you're going to see some significant cuts on that. So now, if we don't do that, what's the resulting outcome? It's going to be Germany. It's going to be Venezuela. It's going to be Zimbabwe. We're going to see, even more. Even though we just in our previous answer, I was talking about the Reserve Bank and said that the RBA package yesterday was the most extreme in Australian history. If these record deficits continue to get out of control, the RBA will be printing ever more currency, and we're going to repeat in terms of the mistakes of history. And for some Australians who believe that the Weimar Republic or Zimbabwe or Venezuela or some of these other European countries that have seen hyperinflation like Hungary or Yugoslavia, if some people believe that can't happen to us, it absolutely can happen to us, and we're pretty much on that track. And there is no voice in professional politics anywhere in the country who's warning about the dangers of too much debt and too much money printing, which is quite alarming.
Well, I forgot to say that Boone Gowdy's book was titled "The End of Australia." Too much debt.
And I would also make a comment that the authors or politicians that say debt doesn't matter. I mean, when you really think about this, if debt doesn't matter, why do you work? I mean, if we don't need to pay back debt, why do we work? We have to work because we have to produce something. We have to eat something. If we don't work, we don't eat. If you don't have to pay back debt, well, I bring the point again. Why are we working? There is a certain reason why we have to pay back debt, because that's under the law of give and take. It's under the law of how to survive. So I think some politicians better start thinking along the lines of looking in history and saying, why do you have to get out of debt?
Well, no business survives if they continue to accumulate debt.
No, the banks will certainly...
In Australia, and people don't realise this, but Australia is just, after all, big business.
Yep.
America is big business.
Yeah. And if private enterprise runs continual deficits, the banks come along and shut you down. That's all there is to it. So there is a reason why they shut you down, because they know that if it continues to keep on going, that there's no way out. You just dig a deeper hole.
Well, I know what President de Gaulle did in 1965. He sent a warship to the United States and said, here's the currency, the US dollars, give me gold in exchange for that. When you lose confidence in the provider of the currency, it's all over.
That's correct. And that's what's going to happen.
Yep. John, in the past few months, we've seen 3 incumbent governments in Australia, Northern Territory, ACT, Queensland, all be re-elected on the back of their response to COVID-19. And there were strong indications from many who were saying they'll never get back in government. But they did. So what do these election results tell you about the state of politics and the future economic direction of Australia?
I would say it tells me a couple of things. The first thing is that if some of our audience members are hoping for a change of direction for the country, if you keep on voting in the same sort of politicians, I don't see that we're going in any different direction. So that is obviously the most concerning thing. So obviously throughout this interview, we've been talking about the current state of the country and where we think things are headed. Well, I think some of these these incumbents being re-elected is going to, it reconfirms our point that we're headed in the wrong direction, and by re-electing these politicians, they're going to continue to send us in the wrong direction. So I don't think public policy is going to change. I do think that it also indicates that the electorate can be spooked. It can be, it can be made fearful if you talk about something that's dangerous like a pandemic, and if you exaggerate the risk. People will tend to gravitate towards safety, security, and these incumbent governments have made certain promises around that, and that's, I think, an important factor around that. One other thing I would say is that I have written some articles about this, and people can go on my personal website, adamseconomics.com, and have a read of. I wrote an article about democracy. The interesting thing is that there have been some writers in the last 200-300 years who have been critical of the type of the type of democracy that we have now, and people have been worried about what sort of economic policies you get from a democratic system. But if people are heavily in debt, if people don't want to face the music, if people want an easy way out, they're going to continue to vote for politicians who will promise them that way out and who will perpetuate policies that at least in the short term look like an easy solution. And so it doesn't take much to print more money. And for a while you can get away with it, and you can trick your population by manipulating inflation statistics and pushing propaganda through the mainstream media to say that everything is fine. But when the chickens come home to roost, those people who place their faith in democracy and the democratic process, it's going to basically hit them like with a 2x4 on the head. And those who are not prepared are going to face huge, horrendous economic and social consequences. One thing that I would say is, and I think we may have touched on this in our last interview, 2020 for a lot of Australians has been a huge year of hardship, financially, socially, mental health, also in terms of their personal health, if they haven't been able to get surgery or see a dentist because of some of these lockdown procedures. For me, because I wrote, 2 years ago, I wrote a 10-point plan of how to prepare for economic Armageddon, and I followed that plan. And I know some of my followers followed that plan as well. And 2020 has been a relatively smooth year for me, my family, my kids, in terms of financially, but also from a social perspective. We've been, we've kept our routine up, and our routine hasn't been disrupted too much. And so we fed relatively well. And going into 2021, I think there will be more hardship as some of these income support measures like JobKeeper and JobSeeker start to go away. So we will see more pain. And Darryl, I know that you've the first time I met you 2 years ago, you talked to me about your mentor and about the importance of being able to party in terms of the following day, and making sure that no matter what happens, you've got a structure and a plan in place that you can weather all conditions in all circumstances. And I think I'm sure you guys are going to say that 2020 has been a relatively smooth sailing year for you guys, financially, but also socially and family. And it's been for me. And there is virtue in being prepared and being awake and researching and not following the crowd and making sure that you understand what's going on and how to live your life accordingly. But I think, just coming back to the question, I think the fact that these incumbent governments have been re-elected to the scale that they have, it signals to me that at least the majority of Australians are pretty much asleep and not awake to where we've been headed over the last decade and where we are likely to go over the next decade to come.
I agree with you 100%, John. And I wish I didn't, but I do. And that is, what I've learned from this. I remember watching Alan Jones. I watch Alan quite regularly and hold him in high regard. And he was talking about Dan Andrews. He said, well, you won't get re-elected again. Well, he probably will, because when you look at the numbers, he's got about 50% support rate. He wouldn't get the support from businesses, of course, more businesses that he has destroyed. No fault of their own, of course. He's just made decisions that have destroyed many businesses in tourism, of course, bars, hotels, entertainment. But there are a number of people who just don't get it. And they've fallen for the trap. The government will look after us. The government will look after us. So they become very dependent upon the government. If you become too dependent upon the government and the whole banking structure, well, they will control the finances that you need every day to function, to eat, to find shelter. Don't become too reliant, but I'm fearful of the fact that Australians are heading down that track. So a little bit like Oliver Twist, isn't it, really? And I've said this before, I know, but Oliver Twist, for those who have never viewed his channel before, Oliver Twist, and we all remember it, goes up to the master of the house and he's eating his bowl of soup, but he's still hungry, and he says, "Please, sir, can I have some more?" And the master looks down and says, "More?" As if to say, who on earth do you think you are asking for more? Let's don't head down that track, because that's pretty much where we're heading at the moment. If the government says there is no more, then there is no more. Thanks, John. That was I'm with you 100%. Just very quickly, and I know that we don't want to go over time, but I was listening to Jim Sinclair, Bill Halter, the other day in a very recent interview, just a few days ago. And I must admit, Brian, John, I have never seen Jim Sinclair as concerned as he was about the economy moving forward. Quite disillusioned. Still in control, certainly he's in control, but very concerned about America and the rest of the world, of course, because they haven't prepared themselves to anywhere near the degree he has. Of course, you've got Bill Halter, his partner, John, is talking over $100,000 an ounce for gold. How does one come up with those sorts of numbers? Pretty simple. Just look at the American debt at the moment, divide it by the amount of ounces that are held at Fort Knox, and you come up with $100,000 for an ounce of gold. So moving forward, precious metals I see as your biggest saviour. Yes, you can own land. Absolutely, you can own land. And yes, you can own a Picasso. Of course you can. But we've said it before, cutting a Picasso up would be an absolute sin.
Can't trade
to just trade a little bit of my Picasso for goods and services. Hey, gold and silver have been money for 100 years. 5,000 years, and certainly the last 100. And so, but I've never heard so many people that I regard so highly use the word scared as often as they are at the moment. It's just coming across all the time. And I'll finish with this, with reference to Jim Sinclair. He said, unfortunately, we've got an option here, and this goes back to the election in the United States at the moment. We've got, our forefathers fought, as he suggested, for freedom, liberty. It's all a waste of time if one party wins this, if the wrong party wins this next election. And it will impact on the rest of the world. He said, socialism to some degree can sound pretty good because, everyone gets a fair share. The rich get less and the poor get more, a little bit like Robin Hood, taking from the rich and giving to the poor. But then the rich don't want to work so hard anymore because why would they? If the poor are going to be elevated to the same level for doing nothing. Yeah. So it's never worked. It's never represented prosperity. But what he did say was this. I'm being asked a question, and this is really good viewing on uswatchdog.com. And the question that they were asked, or Jim was asked, was, do you have children? And he said, yes, I do. And he said, unfortunately, they've fallen for the same trap. And he said, I will love them always. I will love them always, but I will never forgive them for the decisions they've made. Powerful stuff, right? Powerful stuff. From a multi-billionaire, Jim Sinclair. So we've got a struggle ahead of us, for sure.
Yeah, what they're really saying is they're looking for security rather than opportunity. And when you make that decision of looking for security, you get neither opportunity or security.
Yep, yeah, no, that's right. And I will not forget Bill Holter's comments. You know, you will not judge somebody in the future by the amount of shares and stocks that they may have, bonds that they may have, houses that they may have. You will judge them so far as their financial position is concerned by the amount of ounces they hold in their pocket. Powerful stuff. Thank you so much for your support. It is always great. You are extremely methodical, do an enormous amount of research, and you just keep coming back with spades and spades of information for us at As Good as Gold Australia. We're deeply indebted to you, and it's just been fantastic having you on board. And we're anticipating, of course, that that's going to be for many, many more years to come. So until next time, once again, we'd like to thank profusely our viewers, our viewing audience, and our subscribers, and say until next time, stay well, stay focused, and bye for now.